Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I was scrolling through the comment section looking at your guys' comments. One of the things I want to talk about, and I'll read one, it says, Andy, it sounds like you overweight everything in every sector. I like the videos where you showed your allocation into companies with a pie chart. You should use your cost basis rather than the market value. Well, I mean, I'm going to make a comment here, and it seems like a lot of professional investors, the more I talk to, they kind of do the same thing that I do, and I'll describe kind of what that thing is. I don't follow a certain weight or percentage in a sector at all. Like, I don't even look at it, to be honest. It doesn't even really enter my mind. And when I allocated, I showed you what the allocations were last time, just of what I did. It doesn't mean what I did is necessarily right. Well, I think it is right, but it doesn't mean that you should follow what I did. So when you look at it, I may have put 30% energy, 60% energy, or whatever it is at that time. Well, first I'll go over, I've got, roughly speaking, 30% precious metals, 33% real estate, and about 40% in equities. Now that is probably somewhat close, and I'm just guessing where it's at. It may be more in equities now, only for the fact that it's gone up quite a bit. And I'm continuing to buy physical metals to increase that side as well. I'm just making more money off of my equity investments faster than I'm buying physical metals. So that is shrinking to some degree. And I got really good deals at the bottom, so I bought a lot of physical metals because they were available, they were cheap, and people were offloading them at spot price. So the thing I want to make here, that this is the big deal. This is what I think perhaps that I do, and maybe you don't want to apply it, maybe you do. When opportunities come, that is when you jump on them. You don't stick to a set allocation. It's not 30% this, 20% this. Like that, it doesn't matter to me. What I look for is what are the best risk-reward opportunities in the market, irrespective of the sectors. Now, I overweighted some sectors only because they were of great opportunity. That's what drove me to those sectors. That's why I invested at that time, at that allocation, at that overweight, at that thing, XYZ. Now, if I have multiple opportunities at the same time, then I'll have to discern the differences of the risk-reward. And if the rewards are all very good, I'll probably dump in both. That's why I dumped in uranium and oil at the time I did in September, October of 2020. And why at that time, I had to take money out of gold and silver. Not physical, but out of my equities. And I did the rotation September, October. And I was still buying in some certain companies in gold and silver still. But I took chunks, put them into free rides, and put that money in. What is a free ride? A free ride is I had money that I invested in some of these companies. They went up 300% over that bottom to August timeframe. And then September, October, I saw the opportunities in oil and uranium and all these. And I put the gold and silver stuff into a free ride, which means I took the base money out. And then I put that base money into oil and natural gas and uranium. So the one thing that's important is you don't determine when the opportunities come. You are subject to whenever the opportunities are there. And you have to jump on those opportunities when they are there. Now, when I'm making income and I'm, let's say I've got cash, I don't see any opportunities, I'm waiting for an opportunity, and an opportunity presents itself. I buy the opportunity. I don't buy based off of a percent of oil, uranium, or whatever. I buy when the opportunity is there of whatever it is. Or maybe I'll look at other opportunities in a sector or in an area. The opportunity is what's driving where my money goes. I'm not telling the money to go into these areas irrespective of what the charts look like. So what may happen is I get overweight in a stock, in a company, in a sector. Then that can happen. And it can change quite dramatically. I was buying Nova Royalty quite heavily at the bottom in the low $2 range because the opportunity was there. I was buying heavily in Recaf, and I made some comments about me being a little bit too overweight in it because that was the opportunity that was there. When I was looking at these things, Nova looked really good and recaf looked really good because of the chart patterns and the opportunities that were there. Copper was firming up, looked really good. It's like, boom, I'm putting a lot of money in it. And I just kept piling in because that's what the opportunity was there. I was buying physical platinum. The opportunity was there. I could buy cheap ounces from local people selling, and I'm buying ounces in physical platinum because that's what the opportunity was there. And I don't determine what those opportunities are. I don't determine the pricing. I don't determine all that stuff. So over the past few months, I was buying some of these companies based off the opportunities that were there. I'm not really buying too heavily into uranium at the current time. I reallocated some of my money in my 401k. I did buy some, I reallocated things a little bit different in there just because of more opportunity came about in 2022 where I could invest into ETFs. They're allowing it, not just mutual funds. So I bought a lot more oil, a lot more uranium. I bought a lot of copper and rare earth metals and all those things, and I diversified it out. And oil service companies, because I couldn't get that and I didn't like the mutual funds that were there. So I did a big kind of shift there. But the percentages don't really matter. I pile into what the opportunity is. And when looking, if I were to look at the opportunities and I were to go and I would say, okay, what are those opportunities right now? And what was I buying? Why was I buying it? What's so great about these charts that convinced me to go into some of these things? And I'm going to show you here real quick. Here's recaf just because it's right in front of me. I chose recaf because this chart looks absolutely amazing down here. It has all the traits that I look for in a trading setup. And guys, I'm not a Elliott wave expert, but I know a little bit. What if this is a first wave? And I'm just going to throw this out, and I don't know if it is, but what if that's one big first wave? And if it is, if this was like a first wave of something, and we got like a little pullback here, I mean, this thing could easily be a 23 or 30 or $40 stock. I mean, it's possible. It doesn't mean it will, but and that could be a first wave, and a third wave would be here. And the way that this thing was developing, it looked really good for a big move that could potentially come. And we had a big move here, obviously, but I was piling into it. It was coming on down. I was buying a little bit in here. I was getting my sprinkle fest in. It kind of dropped down. I did not buy this bottom, guys. I wish I did. I wish I had a little more money. Came back up and I started sprinkling, buying. And then it's coming on up, and I'm not going to buy right now. I'm just going to hold on. And that's what I'm doing. Nova Royalty had the similar setup. So when we look at Nova Royalty, what's awesome here is, let me go 5 year on this. We were coming down. We were hitting these points. These were strong support areas, and I bought some. I think in here, I bought some in here, and I loaded in. I even got some at like $2.10 and stuff, and I loaded in because the opportunity was there. I didn't choose this. It has a nice pattern. I saw that copper itself. If you were to look at copper, here's copper futures here. Copper was firming up. It broke to the upside. We got our break. It's back testing. So copper looked good. We had confluence. So I was like, all right, copper looks really good. I like Nova Royalty the best. If I'm going to buy Nova Royalty, I'm going to buy it when it's the cheapest I possibly can. And it was right here. I buy. And then I'm now waiting. It's up to $3. I'm positive in all of these investments down here. And I bought down here too when it first went public. And that's how I buy things. I don't chase. Now, I'll be honest, guys, like I got a pretty big position in Nova Royalty now. I also had my recap position is a little crazy as well. It's probably pushing my limits of my portfolio position size. Only because that's what was a good opportunity. I added in some other oil companies too. I did add a little bit here and there. But if you look at like Nova here, This gave me an opportunity for 1, 2, 3, 4, 5, 6, 7. That's 7 days there, a full week here. We had another day here. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. That's 17 days here, a good chunk here. And we had another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, good 12 days down here or more. So that gave me, and remember, they're spread out too. So it was June, July. We had September, October, and then we had November, December through here. And even here would have been a good time to buy. This is literally about 6 months of area to buy. And that's what I do. I took 6 months, and I took, I had my original good starter position in here. I had a pretty good amount here, and I just loaded in, and cost averaged in. Recalf was I could lean into that quite heavily because I like the chart a lot, and I started buying this one. We had I would say a good almost August of 2021 all the way till here recently. Even in January it was still good. So I was buying in, and I also bought in at 2. I bought in this tip here, I think. No, maybe it was. I think I bought in here or $1 something here. I bought in here, and then I bought a bunch in here. So this position's getting quite large for myself. I bought it because the opportunities were there. It was off its highs, and it was looking good. The chart pattern was good. I bought CDEV when it was down here at $4. I remember that. I bought down here too at $4. So I came up a little bit. I bought it kind of in here a bunch, wrote it up, bought it in here on the pullback, bought it in here on the pullback, bought it in here on the pullback, somewhere in here, and now I'm holding on. That's how I position. Now, I'm not buying these things based off of the percentage. I'm buying them based off of where they are on the charts. I loaded in here massively at $1.50 for SM Energy. And I haven't really added too much in most of these portfolios because I went really big in the beginning here on all of the portfolio. CWEGF, I bought a couple of times. I bought it at 33 cents, like in here somewhere, because that's when I had the money. It was like November. I started scaling into it, wrote it on up, and I bought it again here at like $2. I bought it again. It was on one of these this pullback here. No, it was this one here. $1.20 something I bought in just because it was off its highs. I said it hit its head. It's going to pull back. I bought it probably on this up day here. I was going into strength. I bought it, came up, bought it again when it came out, and then we're moving on up. Northern Oil and Gas is the same way. So what you're going to see is, I bought it here on this retest here. I bought it at the tip here. I bought PLG recently at the tip here, right here recently, right at this bottom tip. So I bought that. So I'm not choosing the necessary. I've got a bunch of companies that I'm watching. You can see my list right there. I'm buying them when the opportunity is there, and when the charts look good, and when the overall sector like platinum and palladium and these things are down. When things are down, I buy it. When they're up, I let it ride. Very rarely would I ever buy something like, if you look at this chart behind me, if you see this thing break and it's up here, I wouldn't buy it up here. I mean, maybe I have made some calls where I was wrong, and I maybe would be buying something like down here where I'm trying to catch this bottom. I think it's going to move on up, and then it pulls back again. I did buy here too. I bought in here. I think I even bought thinking it was going to break probably in here. I cost averaged a little bit, and I added a lot more here. And hopefully we get a move higher here. So I don't, if the opportunities are there, I add it. That's how I add it. And whatever the percentage actually ends up being is whatever this percentage ends up being. I try not to get things like, it doesn't have to be 30%. It doesn't have to be 20%. That's not how I view things. So I couldn't even tell you what my percentages are at this moment. It's probably very heavily oil. My portfolio probably lives and dies on oil right now, because some of the positions that I went into, I might have put in it's across a whole bunch of different things. I know in one of mine, I've got like a $5,000 position that I put in, like 5,700 or something like that. That position is now 130,000. That one position. So that position is, and I'm not doing anything with it, is overweight. I've got other ones where you put like $3,000 in, and it's like, $40,000 or $50,000. And I've got a bunch of these kind of all over the place. Now, a lot of them are in oil. I've got like Encore Energy and some other ones that are really big like that as well. And they've grown quite dramatically because I've put these all out. And that's just the one portfolio that I kind of watch as my indicator of what's going on. I've got 6 or 7 different portfolios spread across of all different accounts that I've had throughout the years of working at different places, and rollover IRAs of like my wife's and stuff. And I've done some pretty incredible things without even adding money into them. Turning, like 30,000 into 300,000 or something like that. Over a very short period, a couple years time frame. And that's the entire portfolio. So that's kind of how I've managed it. And I've only gone after where the opportunities exist. And then when you guys ask, that's just kind of a snapshot of where it was and how I did it. It doesn't mean that. It doesn't mean that. I mean, if I were to do it again, I would have gone even more heavy into energy than what I did. Only because that's where I think the best opportunities are for the risk-adjusted rewards. Because I think they've got the best risk-adjusted rewards. And uranium could be good too, and that's got very good ultimate potential. And I like the physical metals. It's a way to diversify my holdings, and the physical metals also diversifies your tax risk and other things. You're out of the system. It diversifies the privacy of your wealth and investments. So I don't determine necessarily the opportunities. I just go with whatever opportunities I find, and then I pile in to that opportunity. If there was an opportunity looking back, I think fertilizer is really good. There's a lot of positive attributes about fertilizer that on a worldwide basis would be very positive for fertilizer, especially if you can go in an area that has cheap energy and that has a lot of resources. And that's kind of how I chose some of the fertilizer companies that I'm in. I want them to be US based. I want them to be in areas that have water and everything else. So that's kind of how I did it. If you want to know, I'm not choosing things because of a certain percentage. I'm choosing it only because of the opportunity. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.